Hi, my name is Ciara Jones, and I'm currently a senior in the Applied Investment Management program at Marquette University. Today, I will be pitching Magna International, ticker MGA, a leading global auto parts supplier that offers an attractive value proposition with their growing exposure in the autonomous vehicle market. Magna International is one of the largest and most diversified auto parts suppliers in the world. MGA designs and operates through 4 business segments, including body and exteriors, power and vision, complete vehicles, and seating systems. The firm has revenue exposure in the US, Austria, Germany, Canada, Mexico, and China. MGA was founded in 1957 and is headquartered in Aurora, Canada. With over 60 years of expertise in the auto industry, Magna is a standout auto supplier with broad capabilities in the design, development, supply, and assembly of vehicles. MGA is well positioned to capitalize on tailwinds from the auto parts manufacturing rebound, with global auto sales expecting to expand by 8 to 10% in fiscal year 21. Even with a lagged auto rebound, MGA is a safe play in the auto industry, as they have been able to hold their margins despite top-line pressure after disposing of 3 unprofitable facilities in fiscal year 20. Loss-saving initiatives, combined with MGA's stable moat trends, have allowed them to expand EBITDA margins to 12.2% in fiscal year 20, surpassing their 5-year average of 5.9%. MGA's strength lies in their ability to adapt to the trends in the auto market. For example, they recently appointed CEO Swami Kotagiri, who's transformed MGA's initiatives to increase its market presence in emerging technologies. MGA's redirect and focus on autonomous technologies will drive top-line growth shown through their advanced driver assistance systems segment that is expected to experience a 19 to 23% CAGR through 2023. MGA continues to grow their market share through a timely cadence of investments. The recently announced acquisition of auto electronics producer Veoneer will expand MGA's major customer base, provide access to new regions, including Asia, and bring on 3,800 additional engineers. With recent auto production concerns, MGA offers compelling value with a share price pullback and a low price to earnings relative to its auto industry peers. Due to MGA's ability to hold margins through production headwinds, their expansion into the ADAS market, and their impressive investment track record, it is recommended that MGA be added to the AIM International portfolio with a price target of $103.81, representing a 35.57% upside. The disruptions from the pandemic, along with chip shortages and a strong demand for cars, have led to auto inventories at multi-decade lows. U.S. dealers had 942,000 vehicles available for retail sale in August fiscal year 21. Down from the 3 million available in fiscal year 19. With the current auto restraints, OEMs have the most attractive value proposition, with pricing power coming from their control over the design and manufacture of auto parts. Despite sales missing expectations in quarter 2, 21, MGA achieved 20% year-over-year growth in EBIT as a percent of sales, demonstrating that in the face of end-market supply chain disruptions, a favorable product mix will drive MGA growth. MGA predicts that they will achieve 7 to 7.4% EBIT in fiscal year 21 through fiscal year 25, demonstrating an improvement of 5% year-over-year from 2.5% in fiscal year 19. The technology shift taking place in the auto sector is not a threat to MGA, but rather an opportunity. MGA is well positioned to grow their leadership role in the ADAS market, which is expected to grow at a 14% CAGR to $46 billion by 2030. MGA's current strength in the ADAS market is a result of their hardware product mix, including front cameras, rear view cameras, and surround view systems, that are further strengthened by the hardware's applicability to EV systems. ADAS revenues are predicted to hit $550 million and grow by at least 20% annually through 2023, excluding the Veoneer acquisition. LG Electronics and MGA announced a $1 billion joint venture for manufacturing complete EV systems. Sales of $150 million from the venture in fiscal year 19 are expected to experience an annual growth rate of 50% by 2025. Since 2018, MGA has completed 8 partnerships and acquisitions valued at $5.7 billion, with half of them in the Asia-Pacific region. Top deals include LG Electronics, Waymo, and Ulsa. In July, MGA announced their most recent merger with Veoneer, a frontrunner in the ADAS market, with a TAM of $11 billion and $1.37 billion in net sales as of fiscal year 20. This transaction is expected to be accretive to earnings per share in 2024 and realize annual run rate synergies of $100 million by 2024. Management expects the combined ADAS businesses of MGA and Veoneer to grow at a 30% CAGR from $1.2 billion to $2.6 billion in 2023. In order to reach an intrinsic value for MGA, a 10-year DCF model was constructed. Using a terminal growth of 1.5% and a WACC of 9.49%, an intrinsic value of $95.77 was reached. A sensitivity analysis of plus and minus 25 basis points on the terminal growth rate and plus and minus 50 basis points on the WACC range from $77.47 to $133.55. Using a price-to-earnings multiple of 19.52, an intrinsic value of $132.32 was calculated. Furthermore, an EV to EBITDA was calculated using a weighted average of 10.31, resulting in a value of $123.53. By weighing the models 75, 12.5, and 12.5, a price target of $103.81 was reached, representing a potential upside of 35.57%. The 3 risks include intense competition, supply disruptions, and customer concentration. For intense competition, the failure to successfully compete with existing or new competitors could affect MGA's market share in certain products or geographic markets. For supply disruptions, COVID-related shutdowns of automotive manufacturing facilities and decisions by semiconductor chip manufacturers to allocate productions to meet non-automotive demand may prevent MGA from supplying products to their customers. And third, for customer concentration, a majority of MGA's sales are to 6 customers, limiting the opportunity for incremental growth in certain geographic regions. Traditionally, MGA has been viewed as a mature, high-quality auto parts supplier, but under the new leadership of CEO Swami Katagiri, the company has taken a strategic redirection with a focus on vehicle megatrends like ADAS. Working alongside Kotagiri are 27 management members with an average age of 66 years and an average tenure of 13 years. MGA is well positioned to capture on growing market opportunities in the auto production rebound, and also through the untapped potential of ADAS and autonomous market segments. MGA will maintain a timely cadence of investments driven by CEO Katagiri's entrepreneurial spirit. It is recommended that Magna International be added to the AIM International portfolio for the reasons above, as well as for their compelling value with a recent share price pullback and their position at a discount to the auto sector.